Hello, this is Professor Kern, and today I'm going to be going over a stock appreciation right sample exam question. And this is covered in Intermediate Accounting 2. So let's get into the sample exam problem. The problem says, on January 1st, 2020, Good Futures Inc. granted 40,000 stock appreciation rights to its executives. The rights vest after 3 years. The rights entitle the employees to receive cash at any time during 2023 for the difference between the market price of Good Futures common stock and a pre-established price of $55. And then we're given the following table. So on December 31st, 2020, the stock appreciation rights are worth $600,000. On December 31st, 2021, the stock appreciation rights are worth $775,000. And on December 31st, 2022, the stock appreciation rights are worth $697,000. And Part A asks, what amount of compensation expense does Good Futures recognize each year in 2020, 2021, and 2022? So the first thing we have to do is to determine when the stock appreciation rights vest. Well, the stock appreciation rights have a vesting period of 3 years. The problem tells us they have a vesting period of 3 years. That means we need to allocate the stock appreciation right or the compensation expense over this 3-year period. The first we'll calculate 2020. So the 2020 compensation expense is going to be the stock appreciation right value times 1 over 3 years. The table gave us the stock appreciation right value of $600,000. So we'll multiply 600,000 times 1 over 3, and that will give us $200,000 of compensation expense in 2020. Then we'll move on to 2021. In 2021, the stock appreciation right value has now gone up to $775,000. Which means that we need to multiply 775,000 times the number of years which have passed during the vesting period. So we've now covered 2/3 of the vesting period, or we're at the end of year 2 out of 3 of the 3-year vesting period. And that gives us $567. $516,667. This will be the ending balance of our stock appreciation right liability. This is not our compensation expense. To figure out our compensation expense, I'm going to draw a T account. This represents a general ledger account where the stock appreciation right liability So in 2020, we would have put $200,000 into our stock appreciation right liability. Well, now at the end, I'll put 2020 out here. Well, now at the end of 2021, the balance in the account should be $516,667. So this will be the 2021 ending balance. So to find our compensation expense, we have to find the debit or credit that we need to make to adjust the stock appreciation right liability from $200,000 to $516,667. And to do that, we're going to have a credit. We're going to have a credit. So we'll take 516,667 minus 200,000. That will give us an ending compensation expense amount of $316,667. And this will be our 2021 compensation expense. So this would be our answer for 2021. Then in 2022, we'll go through a similar process. The stock appreciation rights are now valued at $697,000. And we'll multiply that by the amount of the vesting period that has passed, and that's now 3 out of 3 years, or 1. So that gives us $697,000. Well, now we have to adjust our SAR liability from this $516,667 number to $697,000. Which means again that we'll have to take the difference between $697,000, 516,667, take that difference to find our credit. We get $580,333. And this will be our compensation expense in 2022. And that is how we would answer part A. So now we'll look at part B. Part B asks, it says 35,000 stock appreciation rights are exercised on March 15th, 2023, when Good Future stock price is $70 per share. What amount of compensation expense and stock appreciation right liability does Good Futures recognize on the March 31st, 2023 financial statements? But to answer this question, we have to follow a two-step process. One, we first adjust the SAR liability, or the stock appreciation right liability, to the fair value prior to the exercise of the stock appreciation rights. Second step is we remove the stock appreciation right liability for the exercise portion. And record the cash given to the employees. So the first thing we need to do is adjust the SAR liability to the fair value prior to exercise. So from A, let's remember that we had the SAR ending balance of $697,000. I'm going to draw a new T account here for the SAR liability. And I'm just going to start with a beginning balance of $697. So now we have to figure out what we need to adjust the SAR liability to. Well, the question tells us that on March 15th, when these 35,000 stock appreciation rights are exercised, they are worth $70. So we now need to adjust our SAR liability to the number of stock appreciation rights, which is 40,000, times the difference between $70 per share and the pre-established price of $55 a share from the question. This will be $15 per share or per stock appreciation right. Per stock appreciation right. And this will give us $600,000. So we need to adjust the SAR liability from $697,000 down to $600,000 first. So to do that, we're going to record not a credit like we did in the previous question, but a debit of $97,000. This is going to reduce our compensation expense. A debit to the SAR liability will cause a credit to compensation expense and reduce compensation expense. So on the income statement, we're going to have a compensation expense reduction of $97,000. A compensation expense reduction of $97,000. Or our compensation expense will be $97,000 less than it otherwise would be. Then we need to calculate or figure out how much of the SAR liability that we're actually going to give in cash. So to figure that out, we're going to take 35,000 exercised stock appreciation rights times $15, and that will give us $525,000 of stock appreciation rights that we paid out in cash. Well, the question asks us what goes on the financial statement. So what goes on the financial statement is not this $525,000, but the $600,000 SAR liability account balance minus the $525,000 reduction to the account, or $75,000 of SAR liability, or stock appreciation right liability. And you could also show this up here in the T account. We could extend this line. And we would then do a debit of $525,000. And we would end up with a $75,000 credit balance in our SAR liability. And that would be the answer to part B. Again, this has been Professor Curran. We have gone over the stock appreciation right sample exam question, and this is covered in Intermediate Accounting 2. Let me know if you have any questions. I'm available in my office on Tuesdays and Thursdays from 9 until 3:30, and I'm available on Fridays from 9 to 11 or in the afternoon by appointment. Take care.